Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Wednesday, October 23rd. We're going to take a look at one out of the industrial sector, Old Dominion Freight Line. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. I also do suggestions from viewers and subscribers. So if you have a company like Old Dominion Freight Line you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. I'll try to work it in the rotation on the day it pulls back, and we will look at it together and see if it is presenting any value. Special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. And last request, watch time. That is one of the major metrics that the YouTube algorithm looks at to spread the video. So if you could watch the videos to the end, that would really help out as well. And thank you to everyone who has taken the time to do that. It really does help out the channel. Whenever you drop a comment, hit that thumbs up button, hit the subscribe button, and click that notification bell. Again, thank you so much. This is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I want to add it to my watch list. Once it's on my watch list, I kind of go through that, put them in the order of importance, which ones I like. I need to probably cover my watch list at some point in time and show you what's on there for mine. Some of these come from these videos. Some of those, come from these videos where we review them and I realize, yep, this is a pretty good company. So it is also how I do initial screening. Just because it makes it on my watch list does not mean I am buying. It means that I am interested and I want to do more of a deep dive into the financials of the company, taking a look at their balance sheet, their income statement, stuff like debt to equity ratios. Do they have more assets over liabilities? Is their margins expanding or contracting? Is their revenue expanding or contracting? Are they paying down debt? Are they buying back shares or diluting you as a shareholder? A lot of good information to look at in the balance sheet and income statements, and you should be doing that if you are looking at individual companies, as well as trying to figure out how much you should pay by doing a discounted cash flow analysis or other metrics people use to kind of judge a price. And now if you don't want to do that type of research, if that's a little much for you, there's nothing wrong with ETFs or index funds. Warren Buffett famously recommends the S&P 500, so something like VOO, VOO, the Vanguard S&P 500 ETF, an index fund that tracks the S&P 500, SPY, SPY would be another one. Several of them out there in the marketplace that you could pick up to just track the S&P 500, throw your money into it as you have funds, whenever you get paid, once a month, once a week, once a year, quarterly, whatever that investing timeline looks like. That is a way to do it. Now we are going to take a look at the Vested Interest Stock Screener at the end and see how this one shakes out. And to make it onto my watch list, it must meet 5 of 8. If it was a financial out of the financial sector, like a bank or an insurance company, then we would add in price to book. And I use a 1 as fair value then. Don't use that blindly for all companies. If you're looking at price to book for companies like this one, you would compare it to other companies in the same sector, so in the industrial sector, that are around shipping, right? So Old Dominion Shipping Company, there's several other companies out there that ship by they do primarily trucking. So look at trucking companies that are out there as comparables when you're looking at price to book. Now back to Old Dominion. Check them out on their homepage, www.odfl.com. That's www.odfl.com. That is their homepage where I pull this information from. Driven by relentless desire to deliver, in 1934, Earl Sr. and Lillian Congdon founded Old Dominion Freight Line in Richmond, Virginia, with one truck and a steadfast commitment to keep their promises to customers. Since then, a great deal of work has gone into turning OD into a leader in the freight business. The philosophy of helping the world keep promises still guides us to this day, as the entire OD family carries on the tradition of helping other customers succeed. And you can see here on the right, that is their map of all their service centers, 261 statewide, 99.4% delivery on-time delivery rate, 0.1% claim rates. I'm assuming these are all very good numbers. I don't know enough about trucking to say one way or the other, but primarily they are a trucking company. Why Old Dominion? At OD, we lead on the LTL category. That is less than, I believe that's less than a load, right? Less than a truckload. So smaller loads, maybe a couple pallets or a pallet, not primarily, but that's one of their bread and butter. Obviously they do full loads as well, but they are one of the few companies out there that does do the less than a load shipping as well. Now on to some other metrics, and the reason we are taking a look at them today, down 5.45%. We are talking about Old Dominion Freight Line, ticker ODFL, again out of the industrial sector, closed out the day at 188.67, so $188.67. That actually puts them within 15% of a 52-week low. They do have a 52-week range as low as $165.49, as high as $227.80. Market cap of $40.431 billion, a beta of 0.99, so they are just a hair less volatile than the overall market. PE ratio, now this seems a little elevated for a trucking company in my opinion, but I don't know enough about the sector to really say for sure or not. They could potentially be growing fast enough to justify it, but that's a pretty high PE. Price to earnings ratio of $32.03 per share. EPS, earnings per share, sitting at $5.89 per share. Earnings date was today, so I'm assuming something about their earnings today had them dropping, whether it's bad earnings, whether their forecast was downgraded, something along those lines. So you should check that out if you want to know more about the potential reason for why this dropped. Forward dividend is $1.04. They are quarterly payers, so divide by 4, though we will see that here in a little bit. Yield is very low, starting at 0.53%. Ex-dividend date, December 4th, the next one coming up. So if you were to buy them now, you would be in line for that dividend. You need to buy them at least a day before the ex-dividend date, so December 3rd or before, and they are going to pay out on December 18th. Now, 1-year target estimate, at least according to Yahoo Finance, where I pull this information from, $196.21. So they actually do not see a whole lot of upside from where it currently sits, and they don't see it getting back to its 52-week high. Right? So that's take that with a grain of salt. Again, it's just one metric. Now, jumping over to the right here, I like to look at dividend yield theory and see if it's potentially undervalued based on dividend yield theory. To do that, we look at their 5-year dividend yield average, 0.35%. We compare it to their current 0.53%, or over here where it says forward annual dividend, 0.53%, same number. And since it is higher, it speaks to undervaluation, at least according to dividend yield theory. Now, their payout ratio is low. I like under 75%. They're sitting at 15.75. So very good numbers overall so far. Let's drop down and look at free cash flow. I like growing free cash flow over time. Typically, if a company has growing free cash flow, they can do some things with it. They can pay down debt. They can make acquisitions, reinvest back into the company, buy back shares, or in this case, raise dividends. So going back to 2021 here, you can see $662 million in free cash flow. 2022 up to $916 million in free cash flow. Looks like a bit of a drop in 2023, down to $811 million in free cash flow. And so far in the trailing 12 months, we're sitting at $1 billion in free cash flow. Now let's look at repurchase of shares a little bit. Sometimes that can tell a story and be the difference between a real drop and a perceived drop in free cash flow. Going back to 2021, here you can see $536 million in repurchase of shares. 2022, that jumped up to $1.2 billion. Now this shows me in 2023 there was a negative, so they repurchased 453 million shares, but there was a big drop from 2022 to 2023. So not only was there a drop in free cash flow, there was a significant drop in the repurchase of shares. So they do not have growing free cash flow, in my opinion, because of this down year in 2023. Looks like they've started to increase that again in the trailing 12 months, back up to 748 million repurchase shares there. Now, jumping over to stockanalysis.com, this is another source I go to for information. You pick any sources that you want. I just recommend you should pick 2, if not 3 sources, so you make sure the information you are getting is accurate and up to date. It gives you sources to back check against each other and just verify some of that information. They do have 18 analysts that have taken a look at this. They too call it a consensus hold. Low estimate of $168, which would be a 10.96% decrease from where it currently sits. Average estimate of $202.08, pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 7.11% increase, and if it happened to hit their high of $225, that would be a 19.26% increase from where it currently sits. All the while, you could collect that 0.53% dividend yield. Jumping into statistics, we're going to take a look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. I like 10% or better for these metrics. Return on equity, ROE, sitting at 30.24%, beats the 10% I'm looking for. Same thing with return on invested capital, 24.33%, so above the 10% I'm looking for there as well. EPS forecasted over the next 5 years. I like 5% or better growth forecasted. They're sitting at 13.21%. Very good. With revenue growth forecasted at 9.06%. Very good. This is not really one of the metrics that I look at, but I like to add it in anyway. It is one of the metrics I look at when I do more of a deep dive into the financials of the company. Now, let's go through their dividend history and wrap this one up before we see how it shakes out on the screener here. So quarterly payer, as we mentioned, payout ratio, they're saying 18.18%. Yahoo Finance had them at 15%. Either way, under 20%, very low. Again, I like anything under 75% with very high dividend growth, 30% dividend growth on this one. Says they've been growing it for about 4 years now. Buyback yield of 1.43%. Positive buyback yield means they're doing their buybacks in an efficient manner whenever the company's stock is not overvalued. Shareholder yield at 1.99%. Like this overall. They do pay out on the March, June, September, December timeframe, like most companies do. Going back in time here, May 2022, you can see they were paying 15 cents per share. Jumped that up February 2023 up to 20 cents per share. Most recent raise, March 2024, up to 26 cents per share. Looks like they've already announced that payout in December will be 26 cents as well. So I would anticipate the next dividend raise, if they're going to maintain this dividend growth, it may not be 30%. I mean, that's pretty crazy. But if they do, that would be nice, and it should come sometime in March or around March. Payout looks like that's about whenever they update their payouts or increase their payouts. All right, let's jump back over to the vested interest stock screener and wrap this one up. So understand the business. That's where we start, and that's why we start on their homepage. You really should understand what they do to make their money, right? This one is a shipping company. They're a trucking company, so that's their bread and butter. Growing free cash flow. Nope, we had the one down here, so nothing there. No check there. Growing dividend. Yes, they are growing their dividend 30%. I mean, I don't anticipate that will. Maybe they will. Maybe they'll maintain that 30%. They do have a low payout ratio, so we'll see. Dividend payout ratio under 75%. Yes, it's under 20%, so check there. Dividend yield theory says it's potentially undervalued, so check there. It is within 15% of a 52-week low. Anything under 190 is within 15% of a 52-week low, so it's just under that right now. Return on invested capital and return on equity, check there, both over 10%, and it does have greater than 5% forecasted earnings per share growth, so check there. So we're looking at 1, 2, 3, 4, 5, 6, 7 of 8. So this is going to go on my watch list. It may already be on there. I think we did this one back in June maybe. But it's looking good. It does look like it potentially is starting to get attractive. Maybe you want to throw on your watch list. Let me know what you think in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notifications bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So drop a comment down below. Let me know what you think of the video. Let me know what you think of Old Dominion. Is it one in your portfolio? Is it one you're watching? Or are you maybe one of the people part of that 5% decrease today where you were jumping out of it because of maybe potential earnings report wasn't good or their future projections weren't good? And again, maybe you should check out that earnings report if you are interested in this one to see what's going on there. They did just release that today. Now, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in, and hope you have a great week. We will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.